my favorite indicators. I'm just going to come on camera real quick to say hello to everyone. So I should be able to see me now. Hey guys, how's it going? My name is Daniel. I am greeting you from beautiful Montreal. We are having a very hot summer day, and unfortunately, the air conditioning in my office failed. So I'm a bit sweaty, but nonetheless, I think we're gonna have a good and relaxed session today because I'm super excited because today we will be talking about my top two indicators which have turned my trading around. So with this, let's get into it and just a little heads up. What we're going to be doing today is just a little bit of theory and an explanation of why these two indicators are the ones which are on every chart I'm using. And then we're going to do a lot of live charting afterwards to see them in action. All right, so let's get into it. So what I'm going to show you are two indicators, as mentioned before, which are always, no matter what, on my chart. It doesn't matter what I trade, whether it's going to be a day trade or a scalp trade on a very small time frame, or perhaps a longer term trade, a swing trade, and the like. These two indicators are always on every chart that I open. And why is that? Well, the reason is quite simple because first off, these two indicators have turned our trading around. They made a huge difference in terms of precision of the setups that we've been trading. They helped us to stay on the right side of the market, and kept us oftentimes out of bad trades. And what these bad trades could look like, we're also going to see in today's session. Now, why, you may ask, have these indicators turned our trading around? So good question, because in the end, it's actually quite simple, because these indicators, which I'm going to show you, they helped us, and they have many of our clients as well, to understand what is the current market story, what's going on right now in the market, what's the context in which we are. And why is this important? Well, as you know, in trading, and we have to face reality, trading to some degree is about forecasting what may happen in the future. And if you want to use the paradigm of a story, it is about forecasting and predicting what the next chapter in the story may be like. Now, where will price go from here on? Where will it be? Perhaps tomorrow, if it's a smaller time frame, perhaps next week or next month. And this is what trading is all about. And understanding what the current market story is will help us tremendously to predict what the next chapter may look like. And this is exactly what we're going to be talking today. But before we get into all this, a quick introduction of who I am. So my name is Daniel, as David already mentioned, and I am with TradingIndicators.com. And as our name may suggest, we specialize in the creation of innovative, trading indicators. This has been our bread and butter for many, many years. We've been in the business for more than 10 years. And over these 10 years, we have built more than 1,000 trading indicators for clients all over the world. Many indicators for our own trading, but also for other traders out there who came to us, and say, hey, Daniel, hey, trading indicators, can you build this indicator based on my requirements? So we've done this many, many times for all kinds of platforms, for TradingView, for Modifway, for NinjaTrader, Thinkorswim, TradeStation, MT4, MT5, and so forth. So we've seen it all. But of course, we've seen the ugly and the better indicators out there. What we're going to show you today are the two indicators which I deem to be the best for our trading. So please stay tuned for this. So this is really our bread and butter. We know what we're talking about. We've developed so many indicators for clients, as I mentioned, all over the world. Okay, so but I also need to remind you real quick that trading futures, forex, stocks, or really any asset class does contain risk, and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's start with our topic today. So what we're going to see today are two of our flagship indicators. And we call them flagship indicators because they help us answer two key questions that every trader, it doesn't matter what you trade and on which time frame you trade, that every trader should ask himself. Question number one is, how did we get here? How did we end up where price is right now? All right, that's question number one. And question number two is, what are key levels And this may be underestimated, but every single chart, it doesn't matter what it is, has what we call landmarks or levels. And these levels have certain properties to which price will react in a very special way. And understanding where these levels are can make all the difference. So let's ease into this. Question number one, how did we get here? This typically is a question about trend. So, have we ended up at this point in time by trending upwards, potentially, or by trending downwards? What is the current trend telling us? And oftentimes, it is easier to trade with the trend than against the trend. It's a matter of fact, and it's been statistically proven that trends are more likely to continue than to reverse. Okay, so oftentimes trading with the trend will give you a bit of an edge in that sense. We use one indicator which will show us directly on the price chart what the current trend is doing. This indicator is called MA Rush, and all it does is, and all in quotes, it prints these labels on these charts, either bullish, bearish, and these always alternate. As we know, trends they are either going downwards or going upwards. And the indicator specializes in identifying what the current trend is doing. So that's, the first indicator that is on every single chart because it gives us the context that we need to know of how we ended up where we are right now. Were we trending upwards or were we trending downwards? Indicator number two answers a different question. And the question is, what are key levels? So these levels on the chart, you can see these lines here on the chart. They have different names out there depending on who you talk to. Some people call them support and resistance levels. Others call them liquidity levels. It doesn't really matter what you call them. What's important is that these levels typically act as magnets for price. The price is kind of magnetically drawn to these levels once price approaches them. Oftentimes, we may see a bounce off these levels. You can see it here. Price went all the way up to this bluish line here, and then it bounced off towards lower level. Then price came all the way down to this red line down here, just like a magnet. And where did it stop? Right at this level again, and once again it bounced. And you can see this many, many times over and over again. But of course, nothing lasts forever in life. These levels eventually they will be broken. You can see it here. Support on this red line was broken, and what we saw afterwards was also really interesting because then we saw a big follow through after this key level was broken. So you as a trader, you can probably already imagine how you could take advantage of this. Setup number one, for example, could be, hey, I'm going to play the bounce. Price is going to come up to resistance. I'm anticipating a bounce off this level. We really like this trade because it's a trade where the reward and risk ratio is really favorable. Because what you would do is you would put your stop loss just above this level, and if price goes above, okay, that bounce is not going to happen. You get out of it. But if you're right, you can see a really big follow through afterwards. A nice move, and oftentimes your profit target is much further away than your stop loss, giving you a very nice reward to risk ratio. So these levels, these are printed to us by our liquidity IQ indicator, the second flagship indicator, which is always on our price chart. And one more thing which I would like to mention is, of course, once a level is broken and the indicator confirms or shows us a confirmed breakout by these little breakout signals. So you can see this one, this little arrow downwards facing. That's a breakout. And of course, also this setup could be very interesting because in this case, you could then enter in the direction of the breakout, in this case to the short side, anticipating the price will continue in the breakout direction for quite some time, and you can take profit in the process. All right, now enough theory. I told you a little bit of theory in the beginning. Now let's get real. Let's look at some charts. So I'm going to switch it over to TradingView. I'm going to just quickly find my slides. There we go. I'm going to start with the SPY. And what you see here on the chart, I'm going to actually ease you in. You see our two indicators already applied to the chart. So right now I'm hiding one, the liquidity IQ indicator, and I'm only showing the MA Rush, our trend indicator on the SPY, the S&P 500 ETF. And this is the daily time frame. What you can see here, I'll just zoom out a little bit. You can see it back. You see these labels, bearish and bullish, printed on the chart. And once again, these are our trend indications. And as mentioned, oftentimes it is better to trade with the trend than against the trend. We oftentimes use these labels as a filter. For example, we would only go long if at the same time, like right now, we are actually in a bullish trend. And this bullish trend here was signaled to us back in May 2023. So oftentimes this can be used as an additional filter, but in all honesty, we also have some traders out there who use this indicator as entry signals. So basically they would go long at this point, just stay in this trade until a signal in the opposite direction comes along. And as you can imagine, this can be, if you hit a nice trend, very profitable as well. One more thing about this indicator, so you have all the information, is that it is designed to be as conservative as possible, meaning it will only show you a change of trend if there's overwhelming evidence that this trend change actually has happened. So, case in point is we went bullish here back in 2023 in May. We went up and then we had this bigger correction here, but the indicator didn't flinch. It kept us in this bullish trend because there was not enough evidence right here showcasing to us, hey, we may see a reversal. This was a complete reversal of trend. Then we went further upwards. So good idea to stay in this trend. And then we have this major correction after the tariffs early on this year. And guess what? The indicator still didn't flinch because still there was evidence as far as the indicator was concerned that this bullish trend is still intact and still likely to continue. And once again, it was a good decision. So this is how this first indicator works. It shows us basically how did we end up here? How did we end up at this current price of about 635 right now on the SPY? Well, of course, we are in a bullish trend. So question number one, we are very bullish. This is why we are right now on this chart on the SPY. Question number two is what are key levels? So now I'm going to enter or enable our second indicator, the liquidity IQ indicator. So it's enabled, and once done, a lot of things are happening on the chart. So first of all, you can see these levels being printed. So for example, here, let me just go back a little bit in time to give you a bit more context. So back in February, prices came all the way up, and it was approaching this gray line here. See this gray line here? This is a resistance level. We knew about this level back here in January. So prices came up, they bounced off, came up again, bounced, came up again, bounced off again from this key level. This is our classic bounce setup where prices cannot penetrate a resistance level or perhaps a support level, and instead will bounce off from it. So we had this bounce, of course, a huge bounce, and prices went down. And where did they stop? Look down here. They stopped almost to the T at this gray line once again. What is this gray line? Well, this gray line was a former resistance level. You can see it here. It was drawn on the chart back a couple of years back. It was broken in January 2024. And as we know, when resistance is broken, what happens? Resistance will change its role. Resistance becomes support. So we see this here. Prices went all the way down to this key support level, and then we had the quick turnaround to higher price levels. So then what happened then? Well, then, of course, we recovered just as fast as we went down all the way. And in this case, prices once again were approaching this key resistance level. We broke through it. It's our breakout trade. So the bounce didn't happen here. We broke through it. And now, of course, prices are very extended, trading above its respective resistance zone right here. So what will we do now, or what do we expect now in the SPY? Well, I would expect that prices eventually, because we're very extended, look how far we are away from our averages, our trend indicator, which also shows these lines here on the chart, which are our means, our averages, we are really far away. So I would expect, who knows when it's going to be, but I would expect a correction is going to happen at some point. It's, in my book, not a question of when, not a question of if, it's a question of when it will happen. And if it happens, this could be then a really nice opportunity to enter long into the SPY. But right now, I think the air is very thin up here. We are very extended. I would stay on the sidelines and wait for this correction to happen. All right, so this was the SPY, but let's look at something else. Let's look at gold, GLD. Gold is very interesting because gold was, in fact, our trade of the week a couple of weeks ago. In fact, once this is loaded, there we go. We called out a long trade in gold, in GLD, that's the GLD Spider Fund for gold, when prices came all the way down to this first line of our MA Rush indicator. Do you see it here? Of course, we are bullish in gold. Let me just show this to you. So our bias, let me just go back here, was definitely bullish. So MA Rush, our trend indicator, went bullish back in March 2023. So bullish, bullish, bullish. Of course, we're in a strong uptrend, but not every moment is a good entry moment to enter into this long direction. Why do I say this? Well, of course, it would be foolish to enter when prices are very extended, when they are far away from our averages. Like here, for example, or here. Look how far price is away from this first line, this upper line here of MA Rush. This is extended. Instead, what you want to do is you want to enter when prices are coming down to these levels. For example, here we're nearing down these levels. This could be an interesting entry opportunity. Or, as we called it out a couple of weeks ago, as our trade of the week when prices came down to this first MA Rush level. That's a correction within an uptrend. And as a trend trader, this is when you want to enter. All right. So, but how did we end up here? Well, of course, we're on a bullish trend. We bounced off resistance up here. You can see this resistance line as printed by our liquidity IQ indicator. Prices bounced off and came all the way down to this first MA Rush level. So this was a great area to enter long. And just recently, I believe 2 days ago, we closed out our gold position exactly around this level here. Why? Well, the answer is also quite obvious, because we were approaching once again a key resistance level. So time to ring the register and to get out of this trade, because a bounce, and this of course now we know, but a bounce oftentimes is a possibility once price approaches a key resistance level. So we close our trade here and you see how much price is already lost since this happened. And now what I would do in gold is I would wait to see if perhaps this correction would bring us all the way down to this level here around 300 or 301. Then this could be another interesting long entry opportunity, because in this case, we were just coming off this support level. This red line here, this is the support level. Prices would come off this level and potentially then we see a bounce to the upside at this point. But right now, I would wait for this correction to become a bit deeper and then potentially go long in gold. All right, another example. United States Oil Fund. What is oil doing? USO. All right, and this is almost a daily time frame, but we're going to have some futures day trading examples as well coming up shortly after. Okay, so what do we see here? Well, we can see that USO, this United States Oil Fund ETF, has been quite range bound in the last couple of years. So if you look back since 2023, you can see that price has been in quite a wide sideways pattern, always alternating between key support down here and key resistance up here. And every time price approach one of the extremes, one trade could have been, okay, we are playing the bounce trade. We are anticipating the price will bounce off this level towards the middle in between resistance and support. I can see it here very nicely how well this has worked out. In fact, this bounce up here a couple of months ago, we also called out as part of our trade of the week when prices once again approached this key resistance level up here, as flagged by our liquidity IQ indicator, and then this big bounce has happened. All right, and now where we are in oil, well, now we are fighting this intermediate resistance level. You can see how prices wicked up into this level and couldn't penetrate it. This is because this is an intermediate resistance level. Prices have a difficult time to penetrate this level. Okay, now let me quickly explain to you a couple of extra features of this indicator. First off, there's the feature called mentor mode. I'm going to go to the settings here, and I will enable mentor mode. So it's enabled right now. And once done, you can see it here, it will annotate what you see on the chart. All right, so you can see where's the next resistance level. You can see it right here. Where is my next support level? Not down here, support zone. And when there is what's called a liquidity capture. Let's talk about this concept a little bit more, because this is an advanced concept which is identified by our indicator as well. So what is this? Well, a liquidity capture, you can see this always by these shaded areas around the candles, like here and here and here and here. These are areas of price where price, for example, here, wicks into a key level, in this case, into a resistance level, and the candle, which approaches this level, has abnormally high volume. And there's many different interpretations of how one may trade such a liquidity capture, but our interpretation is, something is happening. Price is going to this key level and volume is spiking up. What could this mean? And in our book, oftentimes our interpretation is, okay, this is an indication that sellers, when price approaches resistance, sellers are stepping in, driving up the volume, or perhaps people are booking profits, same thing. And as a consequence, a bounce will actually happen off this level. So we see this as extra evidence in some sort that prices will actually bounce off this level. And look at how oftentimes you can see it, a liquidity capture area and a strong bounce off this level. Even with this intermediate zone here, prices go up, liquidity capture, we bounce off this level. So this is an advanced concept which comes with our liquidity IQ indicator. Something, and this is very important because there's a reason why we use indicators. We use indicators because they show us something which is not visible to us with the naked eye. That's the whole purpose of indicators. They show us something extra. And I promise you, these liquidity capture events, this is something you cannot really see with your naked eye. You need an indicator. You need calculations for this. All right, so this was feature number one. Feature number two, actually. The first one was the annotations, and the second one was the identification of these liquidity captures. But there's one more thing. Actually, let me go back to our gold trade, GLD. Okay, so look at this setup box here on the bottom right. This box actually tells you what is the current setup at play. So in this particular case, it says the setup is a magnet zone. So a magnet zone, we have education around this. A magnet zone is a situation where price is kind of trapped in between support and resistance. You can see it here, price is kind of in the middle, in between the support level down here and this resistance level up here. And the idea is that, okay, price will not stay too long in this, in quotes, no man's land. It will be attracted to either resistance or support down here, but it will not stay too long here. It will be magnetically drawn to either the upper level or the lower level. This is being pointed out here. And a quick other remark, look at what happened here. Liquidity capture and the bounce. Liquidity capture and the bounce off this resistance level. It's such an important information that this indicator shows to you. Okay, this was a magnet zone where price is in the middle, in between support and resistance. But we have different setups. Let's look at SPY. What do you think the setup is there right now? It's going to be a different one because SPY, as we know, is at all-time highs. And we're trading at unprecedented levels. And the setup is long break. Now we broke above resistance, and ever since prices have been grinding higher. So this would be a long break setup. And even in the box, you can see where should I put my target and where should I put my stop loss if you were to trade this setup right now. Of course, our idea is that you would not trade it from here. The air is too thin. You wait for a pullback. And one more. Let's go to LNG. This was our trade of the week. Yes, on Monday, not yesterday, on Monday. And here I believe the setup will be a long bounce setup. Let me just quickly see if that's indeed the case. Cheniere Energy. Yeah, long bounce. Why long bounce? Because we are right at this support zone. And the idea is, okay, this symbol has been an uptrend for quite some time. It's been fading a little bit. We are right at support. We did have a liquidity capture event. And the idea is we're going to bounce off this support level towards the middle in between support and resistance. So all these things are being pointed out here by our liquidity IQ indicator by means of this setups box. All right. And once again, look at the liquidity capture events around here. What a great sign that, or extra confirmation that the bounce is actually going to happen. Okay, so this were a couple of examples on the daily time frame, but of course our indicators also work on the smaller time frames. Let's check them out. So I'm going to go over here to, and by the way, guys, if you have questions, don't be shy. Please put your questions into the chat box or the Q&A box. And David, please bring those to my attention if you see some questions coming in, including symbol requests. Okay, futures trading. Are there any day traders among the audience today? If yes, perhaps please please put a 1 into the chat. If you are a day trader, here is how we use these two indicators to day trade futures. We do this all the time. We're in the markets almost every single day, either for trading our own account or for passing prop trading challenges. They work great for both. Okay, so let's go to our futures charting here. So this is basically how I am setting up my charts. So what we see here, and this may be a little bit confusing, let me just drag this over a little bit. I like to scan for the most interesting setup. So on TradingView, what I do is I arrange my chart with this 4-chart layout. So this screen here shows the index futures. We have the NASDAQ futures on the left-hand side, then here the S&P 500 futures, here we have the Dow futures, and here we have the Russell futures. And I can see at a glance what's going on. So for example, I can see that in the NASDAQ futures, this little quadrant up here is that prices are approaching a key resistance level. I can also see that momentum has switched from bullish to bearish. So basically, I can see right off, okay, now prices here are approaching a very interesting level. And if you zoom in a little bit on this particular symbol, so I'm going to go to the full screen view. Just a second, I'm going to open up the futures here. I'm going to make it one quick. In fact, I keep this the way it is. I'm going to switch to the 5-minute time frame, which it was. And you can see right off the bat here, we went bearish and we are approaching a key resistance level. So how would we trade this from a short-term point of view? Well, one idea would be is that we would enter into a short position around this level here, perhaps with a limit order, put our stop just above the second line of defense here, this resistance level above, and anticipate, okay, prices will be bouncing off from this level towards lower price levels. Yeah, and we could find this trade very easily by using this 4-chart layout. I can apply the indicators multiple times and basically see where is price right now, where are key levels, where is resistance, where is support, support is down here, and what is our current momentum doing. So this would be one idea, a short trade. We can see how this would pan out of this key level here towards lower price level. So let's wait a little bit to see how price reacts to this level. We can revisit this symbol a bit later today. All right, so these were our index futures. Let's move on. On my second tab here, I have the metals. I have gold on the left-hand side. We can see that gold, I'm going to come back to this in a second, just broke support. We broke below this key support level. Now we're trading lower. We're coming up a little bit. Here we have silver. Silver just bounced off support. You can see it here. It came down. We bounced off the support level. Now we're trading a bit higher. Here we have copper. Copper bounced off resistance. Prices came up here. We bounced off resistance, now trading lower. And here we have platinum down here. Now also very broke below support, and we had a nice follow through. But let's zoom in on gold a little bit more, because I believe many of you might be interested in gold trading. So I'm going to go back to my full screen view, and I will open up gold, MGC, the micro gold futures. And here it is where I'm going to explain one more key concept of this indicator. So right now, you can see we are on a 5-minute chart. That's a very small time frame. And the levels calculated right now, these were calculated based on the 5-minute time frame, these support levels and these resistance levels. But sometimes the 5-minute time frame is a little bit too small to find meaningful levels. Perhaps you've seen this as well. So what you can do with our indicator is you can actually tell the indicator, hey, indicator, pretend to be on a higher time frame. This is possible via this setting here, the base reference time frame. So you can see it's called time frame here, and you can change it from the chart time frame, which is the default, to a higher time frame. Let's say maybe the 1-hour time frame, and observe what happens to our levels once I do this. So I'm going to click here to 1 hour. Everything on the chart is updating in a second. It's still calculating. This takes a little while, and boom, you have different levels now. Yeah, they're much further away. And oftentimes, once you do this, once you go to a higher time frame, you will have more significant levels because they come from a higher time frame where these swings that these levels are based on are more meaningful. Okay, so this is one key feature of this indicator because it allows you to trade up a very small time frame, yet take your levels from a higher time frame. Okay, so what happened here? let's have a quick look. In fact, let me enable one more setting here, the zone break labels. Done. Okay, so what we see here is that we did break below this key level here. You can see this key former resistance level. Let me just quick go back a little. In fact, I'm going to go back to the 30-minute time frame just to find a bit more granular levels to explain to you what we're seeing right now. So once again, this is recalculating. Exactly. And now we see the picture that we saw before. We saw that we broke below the support level back here on Wednesday night. Gold broke below support. You can see it here. Prices went down. A nice follow through, and this is absolutely tradable. Now you can then trade or enter in the direction of the breakout. And the indicator also shows us here it's a short break scenario. So prices came all the way down, and now they're retracing. And I am waiting for prices to come all the way up towards this broken support level. Because guess what? Once support is broken, the role of this level is changing. Support will become resistance, and prices may bounce off this resistance level one more time towards lower price regions. So this could be a second chance to enter to the lower side of this level. This is the situation in gold. All right, back to our overview. What else did we have? We had silver here, we have micro copper, and we do have platinum down here. All right, also in platinum, if you just go back here, we open up PL for platinum, the platinum futures, we can see that once this loads, we are with our zone break here. Nice follow through, and now prices are coming back towards this broken support level. Perhaps an interesting opportunity to re-enter into a short position here once prices come back up. In fact, we see this all the time that prices, after initial follow through, they try to come back up to the level which was just broken, which we call this as the zone break retrace, and then another bearish leg commences from this point on. So we can see it here a little bit. Prices came down, came up a little bit, and then another bearish leg started from this point on. All right, so this is platinum, but let's look at some other symbols. On this chart here, we have crude oil on the right-hand side. We have natural gas on the left-hand side, crude oil. On this side here, on the right-hand side, we have natural gas. We have corn futures down here, and we have soybean futures on this right chart here to the lower end. Let's see if you can spot some interesting setups. Yeah, not too much here. So oil bounced off nicely off this key support level. Is now trading right in the middle, in between support and resistance. Perhaps let's have a quick look at this symbol. I'm going to go to crude oil, MCL. You can see it here. All right. It's loading. So these indicators, they take a little bit of time to load because the calculations that are happening with these indicators, they're actually quite complex. You can see it here. Prices, yes. They bounced off this key support level. And look how many liquidity captures we had when prices approached this level. Like a ton of them at these shaded areas. Extra evidence that this level is likely to hold, and we will see a bounce off this level towards the middle, in between support and resistance. And look at where prices are trading right now. We can see it here. Prices are right in the middle, in the magnet zone between support down here and resistance up here. And once again, the idea is that prices will now be magnetically drawn to either of these levels. If it does, then we may expect another bounce off these levels towards the middle again. All right. So this was our overview of how these indicators work. So I'm going to have a quick look into the chat box to see if there are any questions. And David, are there any questions at this point that I could address? I don't see anything here. I see one symbol request. Bob, we're going to get to this in a bit.
Yeah, that's all I see as well. Just
Perfect.
that one.
All right.
There's one more question that just came through.
Are there any scanners or setups for these indicators? Great question. For some platforms, there are. So TradingView right now does not allow you to do custom scanning. So you cannot scan for these setups. But if you are a Ninja Trader, for example, or if you are on MotiveWave, two of our platforms that we use a lot for these kind of purposes, then you actually can scan for exactly these setups. You can scan for situations where price is near a support level. You may see a bounce, or where price is near a key resistance level, and we may see a bounce off this level towards lower price regions. Another thing you can do, and I was actually not planning to talk about this. We also have a web-based scanner for swing traders available. I'm going to have my contact information out there in a bit. Just quickly log in here. 1 second. It looks like this. A scanner for swing traders, which specializes on scanning for exactly these setups. Everyone is talking about supply and demand. Are you talking about support and resistance? It's pretty much the same concept. Support and resistance levels are created by an excess of supply compared to demand or vice versa. So these two concepts, they are comparable. And in fact, I prefer to think of it as support of resistance because these concepts are more meaningful. Yeah, when we are at resistance, we may see prices bounce off to lower price levels because a resistance is there to prevent prices from going higher. And if there's support, prices may have a hard time moving further down. Okay, so this is our scanner, which we created for swing traders. And for example, one thing you can do in this scanner is to find symbols, and we're scanning through we're scanning through 5,100 symbols here. You can find, for example, any stock which is currently in an uptrend, something like this, and is coming off a key support level. So we go to the setup here. I'm going to look for a long bounce, which is a bounce off key support. And one thing that comes up, for example, is this one here, Arthur J. Gallagher. Let's have a quick look. Now, once we look into the symbol, we can see, okay, this stock is in a strong uptrend, but currently right trading at support. And the idea could be here, for example, all right, maybe I'm going to enter long in the symbol in the anticipation that we'll be bouncing off the support level towards higher price levels, towards the middle in between support and resistance. All right, so another example in our scanner here is, let me just find one that's a bit more well-known, Pearson, PSO. Also here, a stock which has been bullish for quite some time, but right now is coming off a key support level. Look at this one here. We're very bullish, but we went all the way down to this key support level, support zone. And once again, here you may see a bounce towards higher price levels because the overall trend is definitely bullish. We're just in the correction within this bullish trend all the way down to support here. And the idea is, okay, prices may bounce off from this level towards higher price regions. Yeah, and somebody is saying, oh, we even have non-US listed stocks. Yes, we have a lot of foreign stocks in our scanner. For example, if I enable my country selector here, we can see that we have stocks. Oh, actually, let me go to the exchange. This one here, we have many different ways you can scan for exchanges here. Yeah, stocks on the New York Stock Exchange, of course, in Italy, in London, LSE, the London Stock Exchange, German stocks, Australian stocks, and so forth. So a very powerful scanner scanning through thousands of symbols. All right, now back to my slides for just 1 second. So what have we seen so far? A bit of a recap. Well, we have seen our liquidity IQ indicator, an indicator which specializes on identifying these key support down here and resistance levels. And knowing where these levels are can make all the difference in your trading because, for example, oftentimes it can help you staying out of a bad trade. Case in point, let's go back to gold. GLC or GLD, gold, on the daily time frame. What do we see here? Once I switch this real quick. 1 second. What do we see here in gold? Let's give it a 1 second. I've just made a quick change in these settings here. Well, what did we see here? Well, if you're thinking about entering a long position in gold around these levels here, this would not have been a good idea. Why? Because we were right at this resistance level, and the bounce of this level could have been imminent and predictable even. So this is what I mean when these levels, they will help you oftentimes to stay out of bad trades because you always want to make sure if you enter a trade, there's enough room to the upside. And knowing where these key resistance levels are will allow you to evaluate whether there's enough room for this trade to unfold. Okay? So this is possible with our liquidity IQ indicator, which specializes in identifying these key levels on the chart. We've also seen our MA rush indicator, our momentum tracking indicator, which prints these labels directly on your chart, bearish and bullish labels. And we use these labels as filters for our trade ideas. For example, we would only go long if the momentum at the same time is also bullish, or we'd only go short if the momentum at the same time is bearish. So this is how we use the MA rush indicator. And together we call them the dynamic duo because they complement each other so nicely. One indicator shows us key levels, and the other one shows us the trend direction. If you combine the two of them, you can find really powerful setups. And somebody's asking, will it work on the 1 or 2 minute charts? Yes, absolutely. There's absolutely no restriction of what chart you'll be using. These indicators work on any time frame. It doesn't matter. It could even be like a tick chart. No problem whatsoever. Okay. All right. Now, we have these indicators available for a whole host of platforms. For example, for TradingView, as we've seen right now, but also for Thinkorswim, for MotiveWave, for NinjaTrader, and for MT4 and MT5. And another question comes in, do we need to subscribe to level 2 data? No, we don't. The indicators will work with regular price data. No problem. So you don't need level 2 data for this. All right. Now, we're going to come back to the symbol request, which we had in just a bit, but I would like to let you know how can you get hold of these indicators, because we have put together a very special offer for you. So what we have put together is what we call the Liquidity IQ Super Package. And it's available under this link down here, tradingindicators.com/IQ. And David, perhaps you can put this link also into the chat box, so tradingindicators.com/IQ. So typically, and wait until the end, please. The Liquidity IQ indicator alone has a price tag of $1,297. That's the retail price just for this indicator. But today, as part of the super package, you will not only be able to get this indicator, but also a whole host of bonus offers. And bonus number one is our MA Rush indicator, typically selling for $397. That's bonus number one. Bonus number two is an invitation to our next live trading workshop, where we will use these two indicators to live trade the futures market. This workshop is scheduled for July 30th, for next week at 9:30 a.m. Eastern Time. A price tag of $197, and we really encourage our users to come to this live trading workshop, because there you can see exactly how we use these indicators. Not just on a demo account, but on a real money account. And you can basically learn by observing how we are setting up our charts. That's bonus number two. Bonus number three is an invitation to exclusive members-only trading sessions, which will happen every Tuesday at 12 p.m. Eastern Time. And by the way, all these sessions are recorded. So if you miss one, no problem. So every Tuesday at 12 p.m., our exclusive member sessions, normally at $997 a year. You will get these sessions complimentary today for life. Bonus number four is an ebook on how to use the MA Rush indicator. Bonus number five, a video guide. And bonus number six, another video guide on how to use these indicators. So if you total this up, these bonuses are worth $1,800. But today, you will get this entire package for only, or this would be the regular price, but today you will get it for only $997. And this will be for life. You will never have to pay a single payment again. You will get all these indicators, and you will get all the education and support that you will need to take full advantage of these two indicators. And as I mentioned, we use these indicators every single day for our own trading, without exception. So we have a limited number of packages available. So if you are interested in taking advantage, do it now at tradingindicators.com/IQ. And just a quick recap, what's in the package? Well, of course, our Liquidity IQ indicators in the package with all the awesome features that you saw today. That's number one. Number two, you will get our MA Rush indicator to find these momentum reads on your price chart, whether we are currently bearish or bullish. You can then trade with this momentum, with this trend information, instead of against it. Also, you will be invited to our exclusive trading sessions happening every Tuesday at 12 p.m. Eastern Time. And as I mentioned, these are all recorded. You will also be invited to our Discord channel, where you can ask questions, where you can see how other traders are using our indicators, where you can post your charts, where you can learn from other traders. So this is also included. And then you will be invited to our next live trading workshop, scheduled for next week, Thursday, I believe, or Wednesday, July 30th in any case, at 9:30 a.m. as well. And finally, for all of those who are deciding to come on board today, tomorrow at 4 p.m., we will be hosting a dedicated Kickstarter session to get you up to speed, to make sure that you are fully tuned in, that you can install the indicator, that you can use the indicator, that you're ready to go for the week ahead. This one is scheduled for everyone who comes on board before this time for tomorrow at 4 p.m. Eastern time. And once again, the link is tradingindicators.com/IQ. All right. So with this, I'm open for questions. Let's see what questions have we received. All right. So there's a symbol request for day. Okay, for work day. All right. So let's go back to our charts. 1 second. I'm going to open up. Is this the Dayforce Inc? I believe that's the symbol that was requested. Let's have a quick look. And let's see what we can see here. All right, so this is the daily time frame on Dayforce. Okay, we can see that prices are currently approaching this key resistance level. Momentum has switched to bearish, and our indicator is flagging to us a short bounce setup. What does short bounce mean? It means that prices are likely to bounce off this resistance level towards the middle, in between support down here and resistance up here. So if you were interested in going long this symbol, I would advise against it, because once again, this trade would not have enough room. We are right below this key resistance level, and we may see a bounce off this level towards lower price regions. Oh, one more thing I forgot to mention, this is a great symbol actually to look at. The indicator will also show you, okay, if we were to trade this short trade, or to take this short trade here, it will also show you where would be, in this case, my stop loss. Let me just enable this real quick. And where would be my target? There's settings for this. And once enabled, so we're calculating right now, once enabled, the indicator will tell you, okay, if we were to trade this short bounce, my stop would be just above this resistance level here at 62.74, and my target just above the support level. Why there? Because here price may bounce off to the upside again. So you don't want to give away your profit of the short trade. So this would be your target. This would be your short. And if you compare your short to your target, this would give you a reward to risk ratio of probably 2 reward towards the and at 1 risk. Okay. All right. Let me see, what other symbols do we have? Team. All right. Atlassian. Well, very nice company, by the way. We use it a lot for our development. They have great project management and development tools. Let's see what's happening here. All right. So here we can see that prices are in a magnet zone. Prices are, in fact, let me just quickly disable our targets again. We don't need to see them right now. 1 second. And you can see there's so many different settings you can use. All these will be explained in our Kickstarter session on Friday. So here prices are in a magnet zone, pretty much more or less in the middle, in between support and resistance. Yeah. Our momentum is still bullish. You can see it here. MERS is still bullish. It didn't change its mind yet. And perhaps since we're trading near the support level, if prices are coming down a bit closer to the support zone, this could be an interesting long opportunity, anticipating that prices will bounce off the support level towards the middle, or perhaps even towards this resistance level up here. So here I would wait for this pullback to continue a bit further. If you come down to like 184 or something, this could be an interesting long opportunity. All right. Question, is your indicator package available for wealth chart as well? No, unfortunately not. This package is not available for wealth charts. It's available, if I go back to my platforms here, it's available for these platforms. 1 second. Where do we have it? Here, TradingView, Thinkorswim, ModifWave, NinjaTrader, and MetaStock. And of course, we also have this, our web-based scanner, which I was showing here. This is a different offer. So if you're interested in this scanner for swing traders, send me a quick note afterwards, and I will let you know how you can get access to this web-based scanner. All right. Perfect. Quickly looking. Oh, there's another symbol here, NVTS. Okay, let's have a quick look. NVTS. Narita Semiconductor Corporation. All right. It's a bit of a cheaper site. Oh, interesting. So here we went bullish back in May 2025. Prices shut up quickly, then retraced a bit down, and now look where we are right now, right at this resistance level with a bunch of liquidity captures around. So to me, once again, a great example of where I would definitely not go long right now. We are right at resistance. These bounces are likely to happen to the downside. This trade doesn't have enough room to the upside. So here I would definitely wait for either prices to come down, perhaps for price to test this gap here around 679. And then I would perhaps enter into the long direction. But entering long right here at this resistance level with all these liquidity captures around, this is probably not a good idea. All right. NVTS, yeah, we just discussed this one. So right at resistance. So a long trade, I would not recommend. Would I go short at this point here? Potentially, but you would go against the prevailing momentum. So momentum is bullish, and you would go short here. The trade directions don't line up. I personally like to trade symbols where, momentum would be bearish at the same time. Then we had bearish momentum and we were looking for a short bounce trade. Then these two things would line up. And I always like to trade with the current momentum than against it. All right, perfect. So I don't see any questions right now. So let me go back one more time to our charts here. And if you have any symbol requests, please don't hesitate. All right, so one quick reminder, if you want to take advantage of this package, it's tradingindicators.com/IQ, and it includes our liquidity IQ indicator, our MA rush indicator, our live trading workshop, our weekly member sessions, and a whole bunch of support material. So tradingindicators.com/IQ. And a couple of symbols are coming in. All right, so open. Let's have a look. Open door technology. Okay. Ooh. Yeah, these are also stocks where which I personally don't trade. They're just too much on the cheaper side. So, but what do we see here? All right, so prices came up all the way to in fact, this resistance level. Look at where the spike stopped. Exactly at this resistance level, liquidity capture, and then a huge bounce towards lower levels. Then we retraced all the way down, and now we are somewhat in the middle, in between this resistance level up here and this support level. They're not very far apart. And also here, I would probably stay on the sidelines. If we come down perhaps to this level here to 160, maybe then I would consider a long trade. But right now, we're right too near this resistance level here, like basically right in the middle of these two things. Not the ideal setup for a long trade. I would wait for a retracement. Oklo. Okay, another symbol, Oklo. Let's have a look. Oklo Inc. Okay, that's more my kind of stocks, a bit more on the more expensive side. We're definitely bullish. Huge move upwards. Price came all the way up, broke above resistance. Look at this move upwards, and then the retracement. And where did we stop? Exactly at this broken resistance level, which is now acting as support. This shows you one more time how important these levels are. And now, also here, we are trading right in this resistance level with a liquidity capture. So also here, I would be careful. I would wait to see if we can actually break this level. If you break above it, I think then we have blue skies ahead and we may see a breakout move. But right now, we're still right in the middle of this level. I would be careful. I would wait to see if this break actually can happen, because there's still a good chance that we may see a bounce off this level towards lower price regions. So in this case, I would let the market decide. If the market decides, okay, we're going to break above, if you go to that perhaps to 87 or 88, then yes, a long trade could be a good idea. But there's still a good chance that we may see a bounce off this level towards in the middle, in between support and resistance. All right. Okay, perfect. And perhaps one more trade which has been on our books for a long time was RSG, Republic Services, a company in the waste management sector. And if you don't know this company yet, I encourage you to take a look. It's a super, super bullish stock. Very bullish, a very consistent uptrend, which recently retraced down to a key support level. Look at this one here. Great retracement. Where did it stop? At this key support level. And this is when we called out this trade as our trade of the week back in the day. Also, we had a liquidity capture exactly here. in the anticipation, okay, this stock will bounce off. We are super, super bullish. Will bounce off this key support level towards higher regions of price. And look where we are right now, like in the middle, in between support and resistance. If we see another push to lower levels, perhaps a bit of a retracement from here, this could be an interesting swing trading opportunity in the anticipation. Okay, this overarching bullish trend, and look how far I have to go backwards here to actually see the beginning of this trend move. It's crazy. It was down here back in July 2020. We went bullish, and this stock hasn't looked back since then. So great bullish stock, currently available at a discount after the all-time highs here. And this would have been and still is an interesting long entry opportunity. All right. Okay, guys, to wrap it up, so what can you take advantage today? Well, you can get hold of our Liquidity IQ super package consisting of our Liquidity IQ indicator, which shows you all these key levels on the chart, support and resistance. It shows you liquidity capture, it shows you zone breaks. And you will also get our MA rush indicator, which gives you a read on the current momentum. You will be invited to our next live trading workshop on July 30th, where you can follow us and watch us trade a real money account on July 30th. You will be invited to our next training session this Tuesday, in fact, every Tuesday at 12 p.m. Eastern Time. And you will get all these ebooks and e-guides to get you started. And if you make a quick decision tomorrow, July 25th at 4 p.m. Eastern Time, we will be hosting a Kickstarter session to get everyone who comes on board today up to speed. All right, quick look at there are some other symbols. I don't see any symbol. Oh, there's one more, cloth. Okay, one more symbol real quick. CLOV, cloth. Clover Health Investments Corp. Okay. Let's see what our indicators are showing us. Yeah. Oh, interesting one. I like this one better than the other ones before here because here we are definitely bullish. So we went bullish on July in 2024. We went all the way up to all-time highs, bounced off resistance here, lots of liquidity captures, and then we came down. We came down all the way to this key support level. Bounce of this level, another liquidity capture. Then we went into the middle, in between support and resistance, and now another leg further down towards this support level. So if we come down a bit further, perhaps to 292, 290, 280 perhaps, then this could be an interesting long entry opportunity because we will be bouncing off this key support level. And the anticipation would be, okay, we're going to see a bounce to the upside. Why? Because we also have bullish momentum at the same time. All right. Perfect. With this, David, I think I'm going to hand it over back to you. One quick reminder, our trading indicators liquidity IQ super package available at tradingindicators.com/IQ at the special price of only $9.97. This is for life. You will never be able to or never be asked to for a single penny to pay afterwards.